Welcome to the deep dive. This is where we go beyond just, scanning the headlines. We really dig into what's happening globally. It's a lot to keep up with, right? Information flying everywhere, currencies moving, commodities doing their thing, geopolitics. It never stops. Staying genuinely informed, like really understanding it all, that's the tough part. So today, we're doing just that, a comprehensive deep dive. We're looking at the latest in foreign exchange, commodities, trade, and geopolitics. We've got a whole stack of recent briefings, some really rich material here. And our mission for you, listening in, is pretty straightforward. We want to pull out the key insights, give you that shortcut to being properly informed, maybe uncover some surprising connections you hadn't seen. Think of it as your fast track to grasping the big forces shaping things right now. Not just the what, but the why, and maybe even the what's next.
Exactly. There's so much noise out there. Our job is to help you connect those dots. See how something happening in the currency market might link to a trade issue or a geopolitical statement. It's about understanding why things matter, getting that bigger picture context that often gets lost in the day-to-day churn, building that coherent view.
Right. Okay, let's unpack this then. Where should we start? Maybe the currency markets. There was a pretty significant central bank move overnight that caused some ripples.
Yeah, let's start with the Bank of Japan, the BoJ. Now, keeping interest rates at 0.50%, that was pretty much expected, right? No big surprises there. But here's where it got really interesting. The real surprise was their announcement. They're planning to start selling off their holdings of ETFs and J-REITs.
That is interesting. A huge signal, really.
Definitely. I mean, for a bank that's bought so much for so long, absolutely. And you saw the market react, didn't you? USD JPY started to gradually pull back as people digested what this actually means. When a central bank shifts from buying assets to, well, signaling it might start selling, that changes the whole game for financial conditions in Japan. It's more than just tweaking things. It makes you ask, what's the underlying message here? What are they signaling about their view of the Japanese economy, maybe longer term?
So maybe a subtle hint about future policy direction, even if rates are stable for now.
Could be. Maybe, perhaps, a very cautious first step towards normalization down the road, or just building some options for themselves.
Okay, interesting. Meanwhile, looking stateside, the U.S. dollar index, it just keeps pushing higher, doesn't it? Seems quite strong still. What's really driving that?
Well, a lot of it comes down to the U.S. economic data we've been seeing.
Okay.
It's been surprisingly robust, beating expectations quite consistently. You had jobless claims coming in lower than predicted, suggests the labor market is still very tight, very resilient. And then the Philly Fed survey, that was strong too. New orders jumped, employment metrics held up.
Right, so the numbers are backing it up.
Exactly. And all that feeds into market confidence. You
Yeah.
know, confidence that the U.S. economy can handle things maybe better than others right now. That makes the dollar attractive both for investment and as a sort of safe haven.
Makes sense. The contrast with other places really highlights it. And briefly elsewhere, Euro USD seems stuck, couldn't hold above 1.18. GBP USD stayed below 1.36. The Bank of England decision was pretty much priced in, wasn't it? Kept rates steady, slowed QT a bit.
Yes, largely as expected there. No major fireworks. And the Aussie and Kiwi dollars were pretty quiet too. Not much fresh data driving them. Oh, and the PBoC, China's central bank, they set their yuan midpoint a little firmer than the market thought. Just another small piece showing how different regions are managing their currencies right now. It's a diverse picture globally.
Okay, good overview. Let's shift over to commodities then. Crude oil futures were, well, relatively quiet recently after being a bit choppy. But President Trump's comments definitely got some attention, didn't they?
Oh yes, quite direct.
He said oil prices need to come down further, and then specifically mentioned the North Sea, saying there is still plenty of oil left there. Pretty forceful.
Absolutely. And, when a figure like that speaks, even if they're not currently in office, the market listens. Whether it aligns perfectly with the supply-demand numbers or not, those kinds of statements can shift sentiment. Traders start thinking about potential future policy, potential interventions. It really raises that interesting question, doesn't it? How much can political rhetoric alone influence these massive global energy markets? Sometimes perception matters as much as reality.
It's that constant interplay. And sticking with energy, but moving to Europe. Reports suggesting the EU is looking to speed up phasing out Russian LNG, liquefied natural gas.
Yes, that's significant.
So what does that acceleration really signal? What does it mean for Europe's gas supply and prices?
Well, it signals a real sense of urgency, I think. A heightened determination to cut that reliance on Russian energy. And not just gradually, but faster. The implications are pretty big. It means Europe will be competing even more intensely for LNG supplies from other parts of the world, the U.S., Qatar, elsewhere. That could definitely put upward pressure on global LNG prices and shift trade flows around. It's a major strategic pivot, clearly aimed at boosting energy security, even if it costs more in the short term.
Right, de-risking the supply chain, essentially.
Okay.
And quickly on other commodities, gold edged up a bit.
It did, yeah. After being pushed down by the strong dollar earlier, it found a bit of a safe haven bid. Still seems to be some underlying caution among investors. Copper, on the other hand, was trading near its weekly lows. That often reflects worries about global industrial demand, maybe tied to that mixed picture we see in Asia, especially around China.
Okay, got it. Now, trade. Seems like trade tensions are, well, they're always simmering somewhere, aren't they? Still front and center. The U.S. House Select Committee on China, they've urged President Trump to act on what they're calling Beijing's weaponization of critical mineral supply chains. That sounds serious.
It is serious. This goes beyond simple tariffs. We're talking about the essential ingredients for modern technology, for industry, for defense.
And the proposed U.S. responses are quite specific, aren't they? Restricting Chinese airline landing rights, tightening export controls on aircraft parts, coordinating with allies on investment limits into China's aviation sector.
Yeah, it's a multi-pronged approach.
Definitely seems strategic.
It absolutely is. If you step back and look at the bigger picture, this is really about supply chain resilience and national security. Industrial nations are waking up to the fact that relying too heavily on one source for critical minerals creates a major vulnerability. That gives the supplier huge geopolitical leverage. So what's fascinating here is that multifaceted response, direct restrictions, yes, but also that emphasis on coordinating with allies. It signals a more joined-up strategic effort to counter what they see as economic pressure and secure those vital inputs.
Meanwhile, a different dynamic in North America. Sounds like Mexico and Canada are looking to strengthen their ties. President Sheinbaum and Prime Minister Carney reaffirmed commitment to the USMCA, the trade deal.
That's the bedrock.
But they also announced plans for a new bilateral security dialogue aimed at boosting competitiveness across the whole region. That feels like it goes beyond just trade itself.
It certainly suggests a deeper alignment, doesn't it? This kind of proactive cooperation between Mexico and Canada. It signals they share a vision for regional stability. And they're thinking strategically about how to make North America more competitive as a whole. In a world where you see trade fragmenting elsewhere, this kind of regional solidarity sends a pretty powerful message, enhancing collective competitiveness.
Okay, well, let's pivot now to the geopolitical front. Things still very tense in the Middle East, unfortunately. We had the Israeli army warning about a second wave of attacks in southern Lebanon, and then the Lebanese army accusing Israel of violations hindering their own deployment. It sounds incredibly volatile.
It really is a deeply complex and dangerous situation. And it immediately raises questions about adherence to agreements, like UN resolutions, especially when both sides are trading accusations. That cycle of mistrust just deepens. And what's also noticeable is the division among European leaders on how exactly to respond to all this. There isn't really a unified approach, is there?
No, it doesn't seem so. German Chancellor Merz mentioned an EU decision on sanctions coming soon, before the Copenhagen summit, but also voiced concern about the proportionality of Israel's actions in Gaza. And French President Macron suggested UN sanctions on Iran might be coming back. There were even reports that Tehran might pull a resolution it had planned with Russia at the IAEA, the nuclear watchdog, maybe sensing it wouldn't pass.
Right. If you connect all those pieces, it just underscores the sheer complexity of the diplomatic maneuvering going on. You see the role international bodies like the UN and IAEA are trying to play, often struggling, in managing these crises and concerns about things like nuclear proliferation. What's really fascinating, I think, is watching that constant push and pull between individual national interests and the pressure from the international community. It's high-stakes diplomatic chess playing out in real time.
Moving over to Ukraine and Russia, President Trump weighed in again. He said he might eventually push Putin for a ceasefire, but his quote was, "It doesn't feel like the time to do so right now."
That timing element is key, isn't it? Suggests a calculation about leverage and when diplomacy might actually work.
He also expressed a pretty clear frustration with NATO allies over their continued buying of Russian oil. That seems like a pointed message aimed at the alliance.
It definitely is. And statements like that, well, they have implications, both for the unity within NATO itself and for the prospects of any diplomatic track regarding the war. It brings up that difficult question. Who really holds the leverage in a long, drawn-out conflict like this? And how do these kinds of public statements affect the strategies and the willpower of everyone involved? It certainly tests alliance cohesion.
And just to round off the geopolitical points, President Trump also made a point of saying the U.S. will work to ensure the U.K. remains strong. A sort of reassurance, maybe?
Yes, I think so. A clear signal reaffirming that core U.S.-UK strategic alliance, even amidst all the other global turbulence. It suggests that relationship remains a priority, a constant in a changing world.
Wow. Okay, so stepping back after all that, it really brings it home, doesn't it? How interconnected everything is. That Bank of Japan move on ETFs, Trump's oil comments, the critical minerals dispute, those geopolitical hotspots, they don't happen in isolation. Foreign exchange, commodities, trade, geopolitics, they're all tangled together.
Absolutely. We've seen it time and again today. A decision in one area, a statement from one leader, it sends ripples everywhere. It could affect your investment, sure, but also international relations, global stability, everything. Understanding those connections is just crucial to making sense of it all.
And that's really what we try to do here in this deep dive. Hopefully, we've given you a clearer lens, a more insightful way to look at these really complex global forces. So, what does it all mean for you? What's maybe the key thing to keep thinking about after listening today?
Well, here's a thought to chew on, perhaps. Think about the EU accelerating its phase-out of Russian LNG, a very clear strategic move towards energy independence, right? Driven by security concerns. Now put that alongside President Trump's comments. On one hand, saying oil prices need to fall, but on the other, expressing frustration that NATO allies are still buying Russian oil. How do those two things fit together? Or perhaps how do they reflect the different pressures and priorities at play? You've got the drive for energy security clashing with economic realities mixed with political messaging.
Yeah.
How does that dynamic influence the bigger picture of geopolitical alignment and tension that we've just been discussing? It's a fascinating knot to try and untangle.
That is a great question. Lots of layers there. Definitely something to mull over. Thank you for joining us on this deep dive today. Keep digging, keep asking questions, and stay curious about these vital global themes.